Here are some simple steps you can do to prepare to buy in a shifting housing market. Because of the recent rise in interest rates, housing affordability is at its worst level in nearly 37 years, which means a lot of people have been priced out of the housing market. Maybe you can no longer afford the house that you are initially looking at. Or, maybe you're just sitting on the sidelines scared because of how much prices went up and you're afraid to buy and you want house prices to come back down. Well, right now I'm going to give you the most important things that you should focus on as a potential home buyer to set yourself up for success. Then when the opportunity presents itself, you're in the best position to take advantage of the real estate market. Let's go to Donna.
Being prepared is very important. Even if you're 6 months to a year from buying a house, you should talk to a mortgage broker. They will run your credit report, review your income and debt to prepare you for successful home ownership. Most believe they shouldn't get pre-approved until they're ready to buy. That's a big mistake. Having a broker review can give you goals to meet, or you may discover you're ready to buy a home now. If not, the broker will make recommendations on how to improve your credit, or consider making a slightly higher down payment. If you do need a referral to qualified mortgage broker, text "hi" in the comments below and we'll be happy to refer you to one of our preferred lenders that will guide you in the right direction. Next, let's review the myths about down payments. Let's go to Olivia.
How much do you need for a down payment? Most important is having a down payment for your new home. The most repeated myth is that you need a 20% down payment to buy a home. That is not true. You can buy a home with as little as 3% down. Another myth is that you can buy with no money down. They say people and banks are willing to just give you money to buy a house with no money down. Sorry, but these are myths. Yes, there are companies that will allow you to buy a home with no money down. Their qualifications are very strict. In reality, you will need some money for a down payment or for closing costs. Don't fall for that trap. If you have questions about down payments, just text "hi" in the comment section. Next, we will determine how much home you can afford. Let's go to Charles.
When trying to determine how much you can afford to buy a home, start by setting a budget. Write down all your monthly expenses. List how much you spend in groceries, gas, childcare, gym memberships, cell phone, all the things you pay for in a month. This is your debt. Then list your monthly income and determine how much you are comfortable with for a mortgage payment. Most brokers will tell you how much you qualify for, not how much you can afford. Tell them how much you are willing to pay each month. The broker will recalculate and tell you how much home you should purchase. If you need help in running through these calculations, just type "hi" in the comments section and we can begin. Next, we will show you the best way to save for a new home. Let's go to Sally.
Once you have a home buying budget, you can put your home funds into some sort of savings account. Maybe an interest-bearing account. Think of it, every single day you're going to Starbucks and spending $5, $7, or $10 and you know that you can do that at home and cut out that expense. You might be able to save a couple grand a year just in that alone. Having that additional money will probably put you in a better position to buy a home. Also, you may have somebody willing to give you a money gift for the down payment and that's great. Then when you're ready, you have money for a down payment and those closing costs. If you need help setting up a savings program, just type "hi" in the comments section and we can begin. Next, we will show you how to get your best mortgage rate. Let's go to Raymond.
The best strategy to maximize how much you can afford is to get the best rate and terms. You can do this by working on your credit score. A lot of home buyers don't realize how important credit scores are and how much it can impact your mortgage payment. Most don't know how easy it is to improve those scores. Let us give you a quick example. Interest rates are somewhere around 6.75%. Well-qualified buyers could buy a $400,000 home, put 20% down, and finance $320,000. Their payment is going to be $2,075. If you have a lower credit score around 640 to 650, your payment would be $2,827. Your interest rate would be 7.75% and you would pay nearly $800 more per month. If you need help to improve your credit score, type "hi" in the comments section. Next, we will show you how to fix your credit score. Let's go to Miranda.
You can drastically improve your credit scores and be in a better position to buy a home at much better terms. First, look to repair your credit card. Here's an example. You have a $10,000 limit on your card and you're carrying $7,500 of debt, a 75% utilization rate. If you're at or above 50% of your credit card's limit, you have a lower credit score. You should be lower than about 30%. One way to fix this is to call your credit card company and see if they will raise your credit limit from $10,000 to $15,000. This can reduce your utilization rate. They may not agree to this. Another way is to reduce your down payment from 20% to 10% and use this to pay down your credit card. If you want to find out more, just type hi in the comments section. Next, we will reveal a no-cost way to improve your credit score. Let's go to Stephen.
Another thing you can do to improve your credit scores is getting added to a card of a friend, a family member, a spouse, anyone who has a credit card with good credit history. They've been paying on it for an extended period of time and they're only using a small portion of that balance, if anything at all, and you want to get added as an authorized user. You will never use this card. Once you're added as an authorized user, that credit card is actually going to show up on your credit report. As long as it has good standing, that should impact your credit scores in a positive way, helping you to improve those scores. Need help in getting qualified for a new home? Type hi in the comments section. Next, what if you have no credit score? Let's go to Amy.
If you don't have any credit cards, car payments, you will not have a credit score. There's only a handful of lenders that will give you a loan when you have no credit score. You will need to focus on building some credit. Start by getting a credit card. Just don't run it up. Stay under 30% utilization. Keep in mind, it can be difficult to get a credit card company to give you a credit card. You may want to get a secured credit card. With these cards, it's almost like a checking account and a debit card. You will be spending your own money, but that will also help you build your credit. Focusing on your credit score is going to have a bigger impact on your loan than anything else you do. If you need help in developing a credit score, just type hi in the comments section. Next, we will show you how to reduce your debt to income ratio, or DTI. Let's go to Robert.
If you have good credit and a down payment but have a lot of debt, you're probably not able to qualify because of your debt to income ratio, or DTI. The less amount of debt you have, the more you can actually qualify for. If you're in that position, you may want to implement the Dave Ramsey's method called the snowball effect. Start by writing down all your credit card balances. Pay down the lowest balance first and make the minimum payments on everything else. Once you pay off that card, you start paying on the next larger balance. You'll eliminate the balances quicker. Our best recommendation is to speak with one of our brokers for the best recommendation. If you need help with this, just text hi in the comments section. Next, we talk about your student loans. Let's go to Jenny.
If you have a lot of student loans, you can call your student loan company and try to consolidate those loans. You may get an income-based repayment plan on those loans to help lower the monthly payments. Lower payments improve your DTI. Unfortunately, many potential home buyers don't realize how much student loans affect their ability to qualify for a loan. By focusing on consolidation and income-based repayment, there's a really good chance that your monthly payments on those are going to go down significantly. This can help you qualify for more homes. If you need help on this work, just type hi in the comments section. Next, we review the hazards of credit reports. Let's go to Paul.
There are problems with running your credit report that most homebuyers do not know. Limit the number of credit reports. Do not have your credit run a bunch of different times over an extended period of time when you're trying to get qualified for a mortgage. Lenders can run your credit multiple times within a 45-day window, and it shouldn't impact your credit score. Be very wary of getting multiple credit reviews beyond that 45-day period. Having a bunch of inquiries run on your credit report negatively impacts your credit score and hurt your ability to qualify. Also, don't take on any new debt. Don't buy a new car. Don't get new credit cards. All of these could end up impacting your credit score. I would be happy to help you get started with any one of our team members. You just need to type hi in the comments section and we can get started. We've talked about the process that we work with daily and hope that you get a grasp of the hazards and helps that we can offer you. Let's start it with any one of our team members. You just need to type hi in the comments section. In either case, you're ready to go. This should give you some things to work on, and if you found any value today, do us a favor, hit that thumbs up. Also, feel free to follow or subscribe to our channel if you want to stay updated on everything real estate related.